Hi guys, I'm Nicola McKenzie, founder and insurance specialist here at Dunham McCarthy. Now in today's video, I'll be explaining business loan protection, which is an invaluable arrangement and it's designed to safeguard your business, to ensure the smooth repayment of loans, commercial mortgages, or even directors' loans, even in the face of unforeseen events. So if your business has debts, then this video is one not to be missed. Now, before we get into the detail of today's video, if you're thinking about giving your business the resilience financially that it might need and exploring any of the topics that we cover in this video, then remember we've got our very own business protection specialist team here at Dunham McCarthy, and our job is to provide you with free advice and compare options from high street and specialist insurers to make sure that you've got the peace of mind that you need as a business owner. Now, it's also worth me mentioning that when you do arrange business protection with one of our team, we also give you access to our complimentary will writing service over at mylastwill.co.uk, and that's to make sure that your hard-earned assets, your business included, are distributed according to your wishes should the worst happen, which of course is another essential step for entrepreneurs and self-employed. So in today's video, what we'll be discussing is why business loan protection is important, things to consider, and also taxation. Now, let's start by looking at why business loan protection is even important. Now, when you set up a business, often you rely on loans to fuel the growth of the business, to do things like expand operations or seize new opportunities. Now, these loans can often hinge on a few key individuals whose expertise and contributions are integral to the business's success. I know because I set up a business 12 years ago. It's now expanded into a group of companies, Dunham McCarthy being one of them. And certainly in those early days, the expansion or the smooth running of the business, it's not as reliant on me as a founder these days because we're 12 years in, but 12 years ago, myself and my business partner were absolutely crucial to the business's success. And if something had have happened to one of us, then how we would still be able to keep paying the monthly outgoings could have been a huge problem. Now, the reality is that yes, the unexpected can happen and we cannot predict the future, of course. But when it does, the continuity of your business could be at stake. And that's where business loan protection steps in. So it's really there to address the vulnerability of your business by making sure that any loans you've got up against the business are not compromised in the event of death or critical illness. Now, business loan protection insurance will make sure that there's funds there to repay loans, commercial mortgages, or even a director's loan if one of the business owners die or sadly suffer from a critical illness. So you can protect the full loan or mortgage amount with, like I say, life cover or life and critical illness cover. And when you make a claim, the sum assured or the amount of cover is either paid to the business or directly to the lender of that particular loan if the policy has been assigned. Now, business loan protection extends its shield or protection, if you like, to various types of loans, like I say, commercial loans, mortgages, even things like venture capital loans, directors' loans. Now, the fact that the cover is so versatile can act as a financial buffer. And like I say, that gives business owners peace of mind that their business isn't going to be burdened by these debts if one of the owners, for example, were to pass away. So some things for you to consider. Now, you need to establish what the liability is of the loans that the business currently has. And only once that information is clear can you then set up a suitable policy for anyone that's responsible for the repayment of that debt. And that's why I say working out whether or not each owner is jointly liable for the debt or severally liable, that will enable you to work out what each person's responsibility is for that loan. Now, a loan protection policy can then be taken out to make sure that the repayment of a business loan in the event of the death or critical illness of a shareholder, partner, member or director or even sole trader, make sure that those people are covered or that loan is covered should one of those key people pass away. Now, when you take out loan protection, you can select a decreasing or fixed amount of cover. So usually if you've got a mortgage against a property and it's a repayment mortgage, the debt's decreasing over time, then usually you would cover that with a decreasing policy. A fixed sum assured may be appropriate for, say, an interest-only commercial mortgage, but ultimately the term and the cover needs to match ideally the term of the loan and the structure of the loan as well. Now let's talk about tax relief, because since the plan will have been taken out to protect capital of the business, it usually actually wouldn't meet what's called the wholly exclusivity test under HMRC, which means it's unlikely that tax relief is given on the premiums, unfortunately. So where the cover is designed to repay a partnership loan, usually the partners concerned take out own life cover and place it under a business trust for the other business partners, so that even in the event of a claim, they would receive the benefits from the trust and then pay their share of the money into the business to pay off the debt. Now, in the case of a sole trader, if a sole trader was to take out loan protection, then again, that would usually be taken out on what's called their own life and placed into a trust for their family to be able to pay off the outstanding loan and on death even, and the trust would usually make sure that those funds are paid outside of the estate. Therefore, it makes it a much quicker payout and can reduce any inheritance tax liability as well. Now, no tax relief would usually be due on paying the premiums through the business, like I said, since the plan is specifically for loan protection purposes. So that's worth consideration. Now, how much does business loan protection cost? Now, the main consideration here is obviously how much cover you take out, and that's going to depend on the size of the loan that you intend to cover. But other factors such as your age, your health, your occupation, the additional benefits you choose when setting up the policy, all of these things can influence the cost. So obviously I can't give you a set cost in this video, but that's where you need to contact us to get a personalised illustration to find out exactly how much it will cost depending on the size of the liability and all of those other factors that you're looking to cover. But what I will also say actually on that point is that cheap often isn't always best. And often the less you pay for something like insurance cover, it can often mean that you're compromising on quality. So it's often about getting a balance between a competitive premium, yes, but also making sure it's giving you the quality that you need. But in conclusion, understanding the significance of business loan protection can be the key to making sure that your business is financially stable if one of the owners or directors were to pass away and there's loans against the business. Because by safeguarding against the unexpected, you're not only protecting the loans and the mortgages under the business, but ultimately you are protecting the well-being of the business partners and anyone else that's involved in that business. And with the right policy in place, it means that you're just taking that proactive step towards even making sure that your business can continue to thrive irrespective of unforeseen events. Now, remember that each business situation is unique, so that's why it is important to book a free appointment with our dedicated business protection specialist team today. And you can do that by heading over to our website, dm.mortgage, and you can book in online for a free video assessment. Also worth me mentioning that there is a whole series of videos dedicated to how to make sure that your business is financially resilient in the event of unforeseen circumstances. So make sure that you check out the other videos in the playlist. Also make sure that you subscribe to the channel and hit the notification bell if you haven't already. And I'll look forward to catching up with you in the next video.